Costs and expenses. Check writing and recording. YOU can't control your costs and expenses effectively if you don't follow good check writing and recording procedures. The information in your check register must be complete and informative. Remember, your cost analysis is only as good as the source document, your check record. Obviously, you must have an effective check writing system for your business, but even that's not enough. You also have to decide how many accounts to maintain. Multiple checking accounts can save time, but they can also become a headache. This chapter is intended to help you decide on the check writing system most appropriate for your business. Your checkbook or check register records your costs and tells a lot about your business. You can also use your check records to calculate your future cash flow and profits. Make sure that you're getting all the information you need from your check register. This chapter explains the controls and procedures you should use in writing and recording checks, including the checkbook itself, the check register, and the handling of accounts payable in the check writing process. Other problems covered include the proper control of multiple checking accounts in one business and how to handle checks when more than one business runs from the same office, and maintaining the checkbook. It needn't be time-consuming, nor is it difficult to keep a complete and accurate record of checks. But if you neglect the job, you'll lose useful information or lose time when you have to reconstruct the records. Your financial reports, statements, and forecasts will be of little value if you don't know where your money is spent. The time required to create and maintain. Figure 9-1 typical checkbook stubs. A well-organized, controlled check recording system will pay off immediately if you've been negligent in recording checks in the past. Start by writing out complete names and descriptions for each check and carry a balance of payments by account. This will support summary entries recorded elsewhere, aid you in balancing your bank account, give you detail needed for adjustments to accrue or defer costs and expenses, provide records for analysis and forecasting. You need a check summary to update your general ledger each month. You can't complete that job until you've listed all checks and reconciled your account with your bank statement. Balancing your bank account requires that you account for checks cleared as well as checks outstanding. Rather than going through your check stubs, prepare a check listing that gives you all the banking information you need. There's more on this in Chapter 18. Chapter 2 explained how income is deferred or accrued under both the percentage of completion and completed contract accounting methods. You also have to adjust related costs and expenses. The detail needed for adjusting sales is minor when compared to the adjustments you have to make on the money you pay out. Adjusting costs is more complex because there are many cost categories associated with each job. Good, detailed check stubs on payments make for more accurate financial statements and forecasts, and simplify handling of accrued and deferred expenses. The check stub and the canceled checks are supported by source documents, the invoices or receipts that caused the check to be written in the first place. Payment summaries found elsewhere in your books can all be traced back to checks and their supporting source documents. This creates an audit trail. So the check stub, or copy, must have clear, concise information. Figure 9-1 shows check stubs in a checkbook. There are many checkbook styles. If you use a pegboard system, your checks don't look like Figure 9-1. With the board method, there is no check stub at all. We'll discuss pegboard checks later. What to record. Here's the basic information you must record when you write a check, regardless of the format of your check system. The check number, the date, who was paid, what the payment was for, the amount of the check. Checks include a printed number on the check and the stub. If your check stubs don't include a pre-printed number, be sure to write the check number on each stub. Once you write and mail a check, the stub becomes the record of what the check was for and the amount of the check. The reason for payment could be a coded number, a written description, or an invoice number. You're probably familiar with your regular vendors and don't need to write a complete description on the stub. The company name tells the whole story. But what if someone who's completely unfamiliar with your business needs to analyze your checkbook? There will be times when others must look at your checkbook. Your accountant may hire a new assistant. Or you may need a statement for a loan application audited by an outside accounting firm. You could be subject to an insurance or tax audit. Make sure you document each check so no further explanation is required. Complete each check stub on the assumption that the next person to see it won't know anything at all about your operation. Figure 9-1 shows a series of horizontal lines between the stub and the check itself. Not all checkbooks are exactly like this, but all have some area for keeping a running balance. Use this section to bring a balance forward from the previous page and subtract the amount on the check. Record deposits and increase your balance in this column so you know what the current cash balance is. Avoid math errors in bringing forward the balance by checking each page backwards for accuracy. From the bottom, add all checks and subtract all deposits. The total should agree with the amount carried forward at the top of each page. This will save you time when you balance your bank account each month and give you more confidence in the balance you're carrying. Make it a habit to check each page before you go on to the next. Adjustments to make. Keep your account as current as possible. Add or subtract any adjustments as soon as you find out about them. These include math corrections and accounting for bank service charges and return checks. Here are the types of adjustments you can expect to make when you balance your account. A bank service charges. Banks usually charge a monthly fee on checking accounts. It may be called a service charge, handling fee, or activity charge. Some banks charge a set monthly fee. Others base their charge on the number of checks, deposits, and your average balance. You may not know the amount of the charge until you receive your bank statement. The fee reduces your cash balance. Return checks. Checks you've deposited in your account are not always honored by your customer's bank. There may be insufficient funds. The account may have been closed. There could be an unacceptable signature, or a stop payment order may have been put on the check. Whatever the reason, use a form letter or phone call to find out what the problem is. And don't forget to increase your accounts receivable by the amount of the check. In the meantime, your cash balance must be reduced by the amount of the return checks. Special charges. Banks normally charge for printing checks by taking funds directly from your checking account. This is a legitimate business expense and should be recorded in your general ledger. Special charges reduce your cash balance. Automatic payments, for convenience. You can arrange to have loan payments automatically deducted from your account. You must reduce your account balance for such payments and make appropriate entries to your general ledger. Other types of automatic payments, such as insurance premiums, can also be transferred from your account. These often appear on your statements as debit memos. Since the payments are sent to outside parties, the bank makes the payment by honoring a draft, just as though you had written a check. For example, an insurance company could send your bank an authorized draft. Your bank then transfers the funds to the insurance company in your name. These also reduce your cash balance. Overdraft charges. There will usually be a charge for paying or returning checks written against overdrawn accounts. Error adjustments. Your bank notifies you about errors they find. For example, if you have a math error on a deposit, the bank will send you either a debit memo or a credit memo. See Figure 9-2. If you receive a credit memo, increase your balance. You're being given credit for more funds. If you receive a debit memo, decrease your balance. You're being charged for the amount shown. Banking terminology can be confusing. Charges, debits, and debit memos all reduce your balance. Credits and credit memos increase your balance. Non-bank adjustments. When you balance your bank account, you may find other required adjustments. You might find your own math or recording errors. Be sure to adjust your balance for these. And occasionally the bank will make a mistake. Don't adjust your balance for these. Instead, call the bank and explain their error. They'll usually acknowledge the correction in writing and may even prepare a new statement. Balance your account to the corrected statement. Voiding checks. You might void a check as you write it or afterwards. Void a check immediately if you make a mistake while completing the check. Simply carry the same balance forward to the next stub and record void on the stub of the voided check. But if the check is voided later, for example, when a duplicate payment is returned to you, record an increase in your balance to reverse the check. Remember to record the reversal either in a special journal or on your check register. so the adjustment is recorded in your general ledger. Stop payments. Occasionally, you write and mail a check and discover later that the payment was a mistake. Or maybe a check is lost in the mail or at the payee's office. It would be foolish to simply write another check. Both payments might be cashed. Instead, stop your bank from making payment on the check. Most banks require that you go to the bank in person to stop payment. Some permit you to process a stop payment by phone or fax. You have to fill out a form with the check number, amount, date paid, payee, and reason for stopping payment. The bank searches its accumulated checks in your account to see whether the check in question has cleared. If it hasn't, they put your stop order into effect and refuse to honor the check if it does arrive. Most banks charge a fee to put a stop payment order on a check. Some also charge another fee if the check is presented for payment. These fees reduce your cash balance. Figure 9-3 depicts the flow of entries and adjustments in your checkbook. A complete summary of all adjustments is presented in Chapter 18, Figure 18-4. You can use this summary as a reminder list to ensure that the proper general ledger accounts show the changes. From this summary, you can prepare a monthly journal of bank-related adjustments. The journal will also help you balance your cash account in the general ledger. All changes to your cash account balance should be fully documented. Most of this documentation comes from your bank statements. Your bank account will stay in balance once you establish a good procedure. Figure 9-3 checkbook entries and adjustments. The check register. Your check register is a neat summary for your own use and provides the basic general ledger input. You can hire an accountant to prepare your check register, but anyone in your office should be able to do the job if you include enough information on your check stubs. The check register shows at a glance what expense categories you have and where your money goes. This document is the basis for the largest monthly entry in the general ledger. It lists in one place the accounting for all checks written, showing who received payments and in what amounts. Most businesses need to maintain a check register, just as they need sales journals and other important records. The time required to complete a check register is minor compared to the register's usefulness. Prepare the register at least once a month. You might find it more convenient to work on it weekly or even daily. You can't figure your monthly profit without a completed check register. If your monthly financial statement is prepared by a computer service bureau, you probably also receive a computer-prepared check register. Most builders write a lot of checks. That's why monthly summary financial statements are a minimum requirement. Don't go longer than 30 days without preparing your check register. If you write only 50 checks each month, it might take half an hour or 45 minutes to do this job. But bringing a 60-day-old check register up to date can be a big job. And how long would it take you to go through 600 checks once a year? Prepare the check register directly from your checkbook. From check stubs, list each payment in the order you made them. The information on each stub is crucial at this point, as the completeness of these records affects the quality of the check register. When you design your check register, consider the nature of payments in your typical month. Select the important account categories you want to detail out and place them at the top as shown in Figure 9-4. The checks shown were listed in the register directly from check stubs, both in total and in distribution. Use one line for each check and show the date, payee, check number, amount, and description. The description on your check stub must be detailed enough to make distribution to the proper account easy. In Figure 9-4, all payroll checks are listed by net amounts only. Although payroll checks are written from this account, the detail is included elsewhere. Only the total appears here. There are several reasons for this. Listing only the weekly payroll total means that just 4 payroll lines are required, one for each week, rather than a line for every employee each pay period. That simplifies the check register. Check register March 20. Fewer vertical columns are required because only the net payroll amount is listed. You need to prepare a special analysis for labor expenses each week, and the check register isn't the proper place for this. One major function of a check register is that it identifies math errors. The total column is checked by adding distribution totals across the page. See Figure 9-4. This is called cross-footing. Johnson Construction Company chose to break down its check information into materials, net payroll, operating supplies, and automotive expenses. This last category includes gas, oil, and repairs. The final section, Other Expenses, lists all additional expenses and payments. Note that the expenses column includes all payments that affect profit and loss. The general ledger column includes all payments related to the balance sheet. You might prefer to use an appropriate code number from the chart of accounts instead of a written description in the description column. The categories you choose for detail listing are those you think have the largest number of checks each month. This depends on the nature of your business. You might find that you need more vertical columns in your check register. Most forms allow for much more detail than shown in Figure 9-4. Writing checks to cash. Avoid writing checks made out to cash. Business deductions for checks made payable to cash are questionable and harder to prove than checks drawn to a specific payee. To reimburse your petty cash fund, show the distribution in detail. The amount should be supported by detailed receipts or vouchers. To write a check to yourself as a draw against salary, make out the check in your name and describe it on the stub as a draw. There is always a better description than cash handling voided checks. Check 554 in Figure 9-4 was voided. Either an error was made in recording the check or the cancellation of a liability did away with the need for a payment. This happens commonly in every business. Even though there is no amount to be recorded, the voided check is accounted for. Check 554 is listed to explain what happened to that check. It is shown with a zero total. This makes it clear that all checks are listed in sequence and are accounted for. Many builders throw away voided checks. But voided checks are supporting documents just like invoices, canceled checks, and statements. Always keep them as part of your fully documented check control system. Follow these steps when you void checks. Tear off the corner of the check where your signature would appear. Stamp or write void on the face of the check. File the voided check. If you accumulate voided checks in a file for several years, you have a folder that's fat at the bottom and thin on the top. This is a bulky and inconvenient way to keep documents. Besides, it's hard to keep them in numerical order that way. Figure 9-5 shows one way to keep voided checks neatly. Set up a loose leaf binder or booklet of blank pages. Tape voided checks to the pages in check number order. The file stays flat, and you have a numerical reference for all voided checks. You'll need to refer to your voided checks when you require audited financial statements, insurance audits, and stockholder audits. Pegboard check registers. Check registers kept on a pegboard differ from manual checks, as does the procedure for maintaining the register. A pegboard system is more effective than manual check writing if you keep job cost records. The highly proficient computerized systems available make the pegboard obsolete for most of today's applications. Below is a summary of pegboard check writing procedures for builders who still find the pegboard an efficient system. In a pegboard system, there's no check stub. Writing the checks creates the check register directly. This eliminates transferring information from stubs to the check register. The obvious advantage is that maintaining the check register and writing checks takes only slightly more time than writing the check alone. Distribute the total payment to one or more. Figure 9-5 register of voided checks. Columns. You still have to add the total for each page, but the process of copying the date, check number, and payee is eliminated. The disadvantage of pegboard check systems is that the design of the check isn't very flexible. Important information must be on a single line that's transferred through the check, from a carbon strip on the back of the check to the check register. The checks must be written by hand. You can't type them. But the savings in time usually far outweighs the limitations on check choice and design if you write a large volume of checks. A pegboard check takes less time to write than a manual check by the time you fill in the check stub. Figure 9-6 shows a typical check register and pegboard style check. Filling in the date, payee, check number, and amount on the check creates an entry in the check register with the same information. Then you distribute the check total to the correct column or columns at the right of the form. When a page is full, total each column. Check your math by adding the distribution column totals across. Your answer should match the sum of the total column. Carry the balance forward from each column to the top of the next page to keep a running total of the balances. Figure 9-6, typical pegboard check and register. On any check register system, you need a column for other categories of spending. As in the previous examples, there are usually two columns labeled Other Expenses and General Ledger. To make your classification job go more quickly, include a summary of these distribution columns at the bottom of the check register. Figure 9-7 shows how to do this. The amounts in the Other and General Ledger columns have been summarized. This identification would normally be by account code, which saves time because it eliminates writing out lengthy descriptions for each category. Add subtotals for these summaries to find the total. It's better to catch math errors before you begin posting totals to the General Ledger. By that time, arithmetic errors can waste a lot of your time. Using pegboard-style checks may require some adjustment to your routine. Pegboard checks are usually printed and bound so they overlap one another, and you must fold succeeding ones back to write each one. Otherwise, the following check would cover the one you want to write. But once you're used to it, a pegboard check system is easy to control. Many professional building organizations use pegboard checks exclusively. However, automated systems, along with most computer software, are easier to use and able to handle the most complex tasks at the click of a button. It's already becoming hard to find pegboard supplies and printed checks. Before too long, the most faithful pegboard user will have to start using a computer. Other check writing methods. Computerized check writing. Computerized check writing is the most efficient system for businesses that write a large number of checks each month. Today, it's easy to find computer software that suits your needs. The big advantage to automated check writing is the elimination of repetitive information. In the past, the check register's information had to be transferred later to job cost records, creating duplicate effort and increased chance for error. Today, you can write and encode a check, and all required bookkeeping entries are automatically posted. Systems requiring vendor coding and high-maintenance basic record keeping are obsolete. Today, a vendor is easily identified within your system by the first few letters of their name. The only coding you might need in the current system is a job cost record code, and that can be managed with a last name reference, which is far easier to manage than a numerical code. You don't need to print check copies for your records. Everything can be automated to reduce the paper you generate. This includes checks, registers, job records, and vendor records. Even the check information can be stored in your computer by vendor accounts. A requirement with computers is to create backup disks to hold all your business information in case your hard drive fails. A computer, like your car, will break down one day. You don't want to lose all the information on your drive. This is a constant worry for accountants. Before automation, part of your record-keeping system could be lost, but it was unlikely the whole system would disappear. Today, all records on your hard drive can vanish in a second. You don't want to learn this lesson the hard way. It could cost you much money and time to retrace and re-enter the information. Creating a backup disk is fast and easy. You simply copy your files onto removable floppy or zip disks and store them outside of the computer. Some people keep another copy in a different building, such as their house. It's unlikely both locations will simultaneously incur disaster. You can get a large amount of information on a single 31, 2-inch floppy disk, and they're inexpensive. If your computer has a zip drive, much more information can be stored on a removable zip disk. At the time of this writing, many new computers come equipped with a CD-ROM burner. To put one in is no longer particularly expensive. The downside with CDs is that you can only write on them once, though this may soon change. Technology has come a long way since the old microfiche days. Computerized checks don't guarantee that your system will be error-free. As great as computers are, they can't replace human reasoning. A computer doesn't catch the ordinary errors that a person with common sense easily recognizes. Several years ago, a very expensive research project demonstrated a computer limitation. Computer scientists programmed a computer to construct a basic building project using a mechanical arm. The idea was to show that a computer could absorb information from a set of plans and build the structure. One problem: the computer wasn't programmed to begin at the bottom and work up. The idea of gravity wasn't built into its logic. So the computer tried to begin at the top and work its way down. It picked up tiles for the roof and placed them in midair. Obviously, they dropped to the table, resulting in a jumbled pile of tiles. To avoid chaos in your bookkeeping system, remember, the computer only processes what you enter. If you input wrong codes, amounts, dates, or other basic information into the computer, you'll have an unproductive bookkeeping system. This is known as garbage in, garbage out. Mistakes can be expensive and affect your entire system: job cost records, the general ledger, and financial statements. Like any check writing system, in an automated system, checks containing errors have to be voided and replaced. In most systems, it's possible to write checks whenever you want by selecting that area of your program. In outdated computers, an incorrect check couldn't be replaced until the next batch was run, usually the next day. New computer systems are more competent, making your job easier. However, you need to carefully review every payment being made from your account and to sign all checks individually. A danger of automation is that you might loosen your control. Mistakes and errate errors are easier to miss in an automated system, so you can't afford to let your guard down. Voucher checks. Another method for writing checks is the voucher check system. This involves typing out a check that has an original, plus 1 or 2 copies. This was popular when a typewriter was the primary office tool. However, voucher checks, like pegboard systems, are becoming obsolete. Vouchers have a distinct advantage over pegboard systems because the checks are typed. They look more professional than handwritten pegboard checks. Typewritten checks make better copies than handwritten carbons. You can attach one copy to the invoice or statement for the paid bills file and the other copy to manually record in the check register. The voucher system is time-consuming because mistakes can't be typed over. The original check has to be corrected along with both copies, or the check has to be retyped. Figure 9-8 shows a sample voucher check and a record of cash balance form. All of the checks written each day are added together and entered in the checks column of the cash balance record form. The day's deposits are entered in the deposits column, and a running balance is kept. Any known bank adjustments are included under deposits or checks, depending on whether they're additions or subtractions. The voucher system uses a check protector to stamp the check amount onto the check. The machine can also print an automated signature. The machine makes it difficult to alter the check amount, but with the automatic signature, it doesn't prevent checks from getting signed before you review and approve them for payment. You could be inviting trouble. Voucher checks are insufficient compared to the automated systems available today. And like the pegboard system, they're somewhat cumbersome to use. Finding replacement multi-copy checks will become more difficult as people switch over to automated systems. The voucher system will eventually go the way of the pegboard. It was great 20th century technology, but that's in the past. Paying accounts payable. An accurate financial statement requires reliable information prepared consistently from month to month. Under the accrual method of accounting, this means that you must make adjustments to your general ledger balance for accounts payable. The accrual method of accounting requires adjustments for events that haven't happened yet, such as recording income earned but not received, or bills due for which you haven't yet written a check. The accumulated balance of all bills you owe is your true accounts payable. If you know a month in advance that you will owe money to someone, It's an account payable if the services or goods have been received. Don't include liabilities for things you've ordered and will receive in the future, but for which you haven't yet been billed. The other principal accounting method is the cash system. You recognize only cash transactions and don't allow for money due you or owed to others. Under the cash accounting method, you don't record accounts receivable and accounts payable. While this method is acceptable for income tax reporting, it doesn't reflect the true financial picture in a building business because the money owed to you and the money you owe has a significant effect on your profit and loss statement and balance sheet. Some builders record accounts payable only yearly. They carry that balance as the payable liability all the following year. This method gives an acute figure 9%-8 voucher check rate picture of the financial condition of the business, only if the monthly changes in accounts payable are minor. The accounting entry made in the last month of the year would show. At the same time, an entry must be made to reverse the previous year's accounts payable accrual, since the same balance of accounts payable will be carried all year. The offsetting changes to the various cost and expense accounts must also be carried all the following year. Any significant changes in the true balance of accounts payable is not reflected in the monthly financial statements. To this extent, those financial statements don't reflect the facts. One way to solve this problem is to compute the true accounts payable each month. Make a monthly journal entry to record accounts payable and reverse the previous accounts payable total. But this requires keeping your accounts for the month open until you receive all your current bills. Most builders find it inconvenient to keep the books open that long. The most efficient way to keep track of accounts payable on a monthly basis is to maintain 2 check registers, one for current month billings and another for previous month billings. This method lets you pay bills received in the current month for amounts due in the prior month and record these as payments for services in the prior month. Figure 9-9 illustrates the procedure. CR stands for credit and Dr. stands for debit. In the month of April, you keep a check register for April payments. Beginning on May 1, start a check register for May payments on May payables. But also, open an accounts payable register for May payments of April payables. Once the register for April is closed, the balance of accounts payable is reversed as shown at the right in figure 9-9. The net effect of this is that the balance of accounts payable is fixed at the end of each month, and the total is reversed each month after you close the books. This method is ideal for builders who have a large volume of checks. It works best if you use 2 different sets of check numbers, one for the check register and one for the accounts payable register. Without this precaution, you lose the control inherent in writing checks for each month in numerical sequence. Figure 9-10 should help you better understand the result of using a dual register system. This summary form shows the effect of the various transactions on the accounts involved. The cash account entry shows all cash payments. The accounts payable account is reversed to 0 each month. But as of the close of any period, the accounts payable total should show the actual amount owed. Multiple checking accounts. As mentioned above, one of the problems with the 2-register method is that you must use checks with 2 series of numbers. This complicates balancing your bank account because outstanding checks also fall into 2 series. There is another way to simplify recording accounts payable, and it might also help you balance your bank account. This involves using 2 checking accounts and alternating what you use them for from month to month. This is illustrated in figure 9-11. Beginning on the first day of April, write checks from account B and continue through the month. On the first day of May, use that account only to write checks against the accounts payable register and use account A for current payments. Balance account B at the end of May. By that time, most, if not all, of the accounts payable checks will have cleared. From the last check from May's check register to the first check in the May accounts payable register, the number sequence is unbroken, so your statement will contain only 1 series of numbers. Beginning on June 1, bank account B is again used for paying the current month's bills, while account A is then used for the May accounts payable register. Balance account A at the end of June. This method reduces the number of outstanding checks for each account in alternate months. Each account is inactive for almost a month at a time. The outstanding checks list is smaller every second month because no checks are written for 2 or 3 weeks prior to the end of each alternate month. This is an important consideration for builders who write many checks. It could save a lot of time when you write out your list of uncleared checks. With a single checking account, it's always a good idea to balance it every month. In this case, you have 2 accounts, but only balance each of them on alternate months. And balancing takes less time because there are fewer outstanding checks. Bank deposits for multiple accounts. Maintaining 2 checking accounts requires some planning of bank deposits. You must be careful to make deposits to the proper account to cover expected checks, whether they are for current payments or for the previous month's accounts payable. If both accounts are in one bank, you can usually request a transfer between accounts over the phone. Otherwise, you can write a check from one account to the other. The extra attention needed to use a dual account system is usually more than offset by the advantages. Another use of multiple checking accounts is in setting aside funds for special purposes. For example, some builders have 3 accounts. General account, for the bulk of costs and expenses. This account should receive all bank deposits. Figure 9-9 accounts payable, double register method. Payroll account, for payroll only. Deposit in this account only enough money to cover the payroll and the estimated service charges. Maintain a minimum balance in this account. Tax account, like the payroll account, deposits are made to this account from the general account only as required. The amount deposited is the estimated total taxes due. These might include payroll taxes, sales tax, highway use tax, property, public utilities, and any other taxes. Whether multiple accounts are used for different kinds of payments or just to stagger activity in the check register and payroll register, maintain the controls required. The more accounts you have, the more bank accounts you have to keep balanced, the more printed checks you have to buy, and the more service charges you have to pay. Multiple businesses. Some builders run more than one business from the same office. This can cause a lot of bookkeeping problems, such as the allocation of shared overhead and inventories. Bills paid by one business may be partly charged to the other business. This requires some established control method for intercompany dealings. Accounting for multiple businesses under single ownership can be difficult, especially when it comes to the checkbook. For example, suppose you decide that 1/3 of your rent should be paid by the second business. Should you split the bill and write 2 checks? Or should one business pay the bill and be reimbursed by the other? It's a problem either way. It's nearly impossible to allocate overhead expenses precisely between 2 businesses. The basis on which this is done must vary with each type of expense. Even with the best and most complete analysis, allocation is still an estimate, and money flowing back and forth between the 2 businesses will obscure the true profit picture of both. But the 2-business shop is common. The builder with 2 businesses can only handle the accounting in the best way available. The best accounting system for a builder who owns both businesses is to avoid transfers between the 2 operations, except for periodic adjustments. This involves setting up a balance sheet net worth control account on the books of both companies. The net worth account of a dual operation shop would look like this. This example assumes that Johnson Construction has a second operation, Johnson Freight Company. This freight company's net worth section would include a similar control account, Johnson Construction Company, Control. The balance at any time would be identical in both accounts. One would be a positive number. The other would be negative, depending on which company owes the most to the other. Clear the control accounts to 0 occasionally by issuing a check from one company to the other. Keep these transfers to a minimum to make it clear the 2 companies are indeed separate. Dual business operations often have far more than their share of problems. Reduce the problems to a minimum by keeping the books as simple as possible. If Johnson Construction makes a payment, 1/3 of which is due from Johnson Freight Company, the entry would be Johnson Freight Company would make this entry in its books. The two control accounts would have the same entry. The Johnson Freight Company entry, picked up from an allocated charge, should be supported by a voucher to be issued like a bill from Johnson Construction. This is the right way to document the assignment of a bill from one company to another. Good records require this minimum amount of paper flow, but there is no advantage to paying a bill for another company to avoid writing out a separate check. The payment still must be documented. In this example, some supporting document is required for two sets of books, the charging company and the charge company. Dual operations cause more paper flow, not less. If you need to operate more than one business, keep the books for each business separate and share expenses by writing multiple checks. The automated system. Will full automation of your system change the way you manage check writing? If you do a large volume of checks, it will certainly cut down on repetitive work. For example, in a sophisticated bookkeeping system, you should be able to make one entry to produce the following: A printed check. B, an entry to cash disbursements journal. C, a summary entry to general ledger. D, a running record adjustment to cash balance. E, a job cost record entry. That's a lot of information for a single entry. This demonstrates some of the advantages of automating your bookkeeping system. If you're working with a high volume of transactions, a non-automated system could demand so much bookkeeping time that it limits or prevents growth. So the effectiveness of automation makes a lot of sense. Whatever system you use, you need to keep control of your records and be responsible for managing your accounts and all aspects of your business. One important reason for bookkeeping is to provide the needed information to properly control what's going on in your business. As an experienced owner, you can get a lot of information from observing the outflow of money, especially when it's flowing out of your account. For example, you might notice a big increase in material costs, but not a corresponding completion rate in the job involved. That deserves investigation. Why are you buying that much material? And what will that do to your cash flow next month? Is your bookkeeper taking advantage of discounts offered? Is the cost coded to the wrong job? Have you missed anything? In other words, if you have a computer system installed and working well, it doesn't mean you can afford to stop policing your transactions. The books and records tell you a lot, but like walking a job site, yourself to see how it's going, you need to walk through your books to see what's going on financially. The check writing system you use should be the most efficient you can find. Don't adopt a procedure that gives you less than you need or more than you want. For some builders, a pegboard or voucher system works well enough. It's flexible but allows room for growth. Fortunately, the volume of checks in most operations does not grow as much as receivables. So any workable method should have a long, useful life.